Warren Buffett 9 Investing Tips for 2023. Many people consider Warren Buffett as one of the greatest investors of all time. He is highly regarded for his ability to effectively explain complex concepts, his astute methods of selecting stocks, and his knack for profiting in challenging market conditions. Finding someone with his exceptional qualities is a rarity, and it is unlikely that we will come across another individual like him in the future. Thankfully, in 2023, we are fortunate enough to still have him with us, allowing us to continue benefiting from his extensive experience in the market. In this video, we will be sharing a set of investing tips inspired by Warren Buffett's strategies, tailored specifically for investing in 2023. Interest rates act as the gravitational force that affects asset prices, just like gravity influences an apple. Understanding the events of 2022 is crucial for informed decision-making in 2023. Stocks don't always rise continuously, as many investors learned the hard way. Warren Buffett offers valuable insights into the key factors impacting stock movements, especially interest rates. Buffett compares interest rates to gravity's effect on an apple. Low rates weaken the gravitational pull on asset prices, while rising rates intensify the pull, exerting downward pressure on the stock market. The Federal Reserve, led by Jerome Powell, plays a vital role in controlling interest rates. In 2022, Powell significantly raised rates, impacting stock prices due to the increased gravitational pull, as per Buffett's principle. This decline, driven by rising rates, is an important consideration. Powell plans to continue raising rates in 2023, potentially adding further downward pressure on stocks. Being prepared for this scenario is crucial. Warren Buffett's teachings offer valuable guidance on navigating and responding to falling stock prices. Buy stocks even if they fall. Warren Buffett, synonymous with value investing, sets himself apart from the majority of investors. While others panic during market declines, value investors see opportunity. They recognize that stocks represent ownership in businesses and aim to buy at discount prices, following Buffett's famous advice. Be fearful when others are greedy, and greedy when others are fearful. Value investors view market crashes positively, like enjoying a sale on favorite items. They consider themselves net buyers, a mindset they've embraced from an early age. Despite challenges, the long-term outlook for American businesses remains positive. The 20th century saw significant growth, with dividends surpassing average stock prices threefold. American businesses have shown resilience and prosperity over time. Even during world wars and economic downturns, individual investors hold the power to hinder their own results by maintaining discipline, embracing market downturns, and having faith in the enduring strength of American businesses. Investors position themselves for long-term success. Learn from what he bought in 2022. To understand investing in 2023, analyzing Warren Buffett's stock purchases in 2022 provides valuable insights into his strategies for the current market. Three significant buys stand out, shaping his portfolio. The largest purchase, Chevron, accounted for 5.72% of his holdings. As an oil company with a low price-to-earnings or PE ratio and attractive dividends, it caught Buffett's attention. Occidental Petroleum, another oil industry acquisition, represented 3.3% of his portfolio, boasting similar characteristics of a low PE ratio and dividends. In a surprising move, Buffett invested in Taiwan Semiconductors despite his limited understanding of technology. However, he recognizes the enduring demand for devices like phones and computers, aligning with his philosophy of investing in what he comprehends. While his team may have executed this purchase, it still reflects Buffett's overall strategy. A consistent pattern emerges among these stocks: low PE ratios and modest dividends. This strategy holds potential for consideration in 2023. Emulating Buffett's focus on companies providing essential goods and services with strong market demand may prove beneficial for investors. Buy quality businesses. In the midst of challenging economic times, it becomes evident which businesses are poorly equipped to withstand such conditions. As Warren Buffett famously stated, while this outcome benefits society by eliminating weak businesses, it can be detrimental for those who invested in them. Thus, in 2023, it is crucial to prioritize investments in high-quality businesses that offer products of genuine societal value. Warren Buffett has consistently demonstrated this approach by investing in renowned companies such as Coca-Cola, Apple, Kraft Heinz, and Duracell. By focusing on these resilient and stable businesses, investors increase their likelihood of navigating tough economic conditions successfully and enjoying sustainable returns. Following Buffett's lead in prioritizing quality investments can prove wise in the current market landscape. Slow and steady wins the race. Kathy seemed to have forgotten or never learned a crucial rule. Rule number 1, don't lose money. And let's not forget rule number 2, don't forget rule number 1. In the exhilarating stock market journey, Kathy Wood had a remarkable run in 2020 and 2021. It felt like everyone was getting rich, especially in the world of high-growth tech stocks and innovation. But then came 2022, and both the economy and the stock market faced challenges. The blow was even harder for high-growth tech and innovation companies. Now, reflecting on the past 5 years, Warren Buffett shines with a 56% gain, while Kathy Wood lags behind with a 5% loss. The lesson is crystal clear. Avoid losing money, be cautious, and don't overpay for stocks. While the allure of rapid growth and innovation is enticing, it's vital to approach investments with a conservative mindset. Consider the value and stability of the companies you invest in. Warren Buffett's proven conservative approach serves as a valuable reminder in the thrilling and unforgiving world of the stock market. Be careful investing in borrowed money. When buying a business, make sure it doesn't limp. Wait, what? This analogy applies to purchasing stocks, as shared by Warren Buffett. He warns against businesses with excessive debt, using the story of a limping horse. Such businesses may thrive in good times but stumble in bear markets. To avoid investing in limping horses, examine a stock's balance sheet. Take Alphabet as an example. Check Yahoo Finance or the financial section for its balance sheet. You'll find Alphabet has manageable total debt of $28.3 billion and an impressive $139 billion in cash. They are not a limping horse. However, consider another stock like AT&T. It carries a hefty total debt of $150 billion, while its cash on hand is only $2.4 billion. This stock is indeed a limping horse. The lesson here is to assess a company's financial health before investing. Excessive debt can be a liability during challenging market conditions. Look for companies with manageable debt and strong cash positions. By doing so, you can avoid investing in limping horses and make more informed decisions. Know the value of what you buy. In the investing world, they say that a fool knows the price of everything, but the value of nothing. How true is this? While many fools obsess over stock prices, investors who follow Warren Buffett focus on something more critical: value. Understanding the true value of a stock simplifies the investing process. Instead of chasing fluctuations, investors can identify stocks that are significantly cheaper than their true worth. To determine true value, the Warren Buffett method comes into play. By discounting future cash flows, one can calculate the intrinsic value of a stock. These calculations and insights are shared in the Investing Academy, a group dedicated to informed investing. Knowing the true value of stocks isn't as complex as it seems. It involves analyzing future cash flows and discounting them back to the present day. Understanding the value of the stocks you own frees you from panicking about price fluctuations. Don't be a fool fixated on prices. Focus on value and make smarter investment decisions. Check out the link in the description for more detailed explanations and insights on determining stock value. Invest differently to others. Warren Buffett has always gone against the grain. While most investors flock to Wall Street to buy stocks, Buffett prefers to stay in Omaha. While others frequently make stock moves, Buffett rarely sells and opts to hold stocks for the long term. This starkly contrasts with the average investor who often underperforms the market, while Buffett consistently beats it. Having a different mindset from the average investor is crucial. Many investors struggle to achieve satisfactory results. If you find yourself regularly disagreeing with the crowd in your investment approach, consider it a positive sign. Independent thinking is necessary for successful investing. Don't be afraid to go against the norm and carve your own path, just as Warren Buffett has done. Invest in stocks, they're your greatest asset. When choosing the asset class for 2023, let's explore their historical performance. Over 200 years, the stock market has been the clear winner, outperforming bonds twofold and gold by over 6 times, even after adjusting for inflation. Holding cash over time results in depreciating due to inflation, leading to a technical loss. This is why Warren Buffett favors stocks. They represent businesses focused on generating wealth and offer greater rewards than other assets. It's worth noting that the graph doesn't include real estate for crypto, which are alternative options. Real estate can be a good investment, while crypto carries higher risks. If considering crypto, conduct your own calculations and carefully evaluate potential risks and rewards. For most investors, stocks or businesses are the preferred choice. However, older investors seeking stability may explore more secure asset classes. While stocks can have periods of lower returns, history demonstrates their excellent long-term potential as exemplified by Warren Buffett.